Hi, everyone. This is Rob Roy of Elliott Options, and welcome to TradeFinder Live. If this is your first time joining us at TradeFinder, welcome. For those of you streaming on YouTube, welcome to you as well. If you've been here before or a current subscriber, also welcome to you. All of you have likely seen one of our videos before, but if not, we have to show this disclosure/disclaimer. It is a requirement, so if you haven't seen this before, please take a screenshot of it, read it in detail at your leisure. A couple things that the powers that be want us to make sure you're aware of is, number one, we are not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. And that's because we have a lot of international viewers and have a lot of international subscribers. The way TradeFinder works is we'll do a brief update of the market, kind of falling in line with the SPY update that we did over the weekend. Hopefully on YouTube you've seen that. If you're streaming it on YouTube, you can go to our YouTube channel and take a look at what we posted. But we'll go through that along with a number of other markets. Then we'll do a review of any trade alerts that we have closed with our subscribers on our website, give you an idea of how that works. Then we'll go through a rundown of previous case study considerations that we have identified in previous trade finders, catch you up to date on where those might be. And then with whatever time is left after looking for a case study consideration for tonight, we'll open it up to general Q&A. And that usually amounts to you guys giving us your favorite stock symbol, and we take a look at what our indicators may show for that. So that's it. That's how TradeFinder works. So again, welcome. Been an interesting start to the week, hasn't it? So if we take a look at the S&P, one of the things that we showed in the update over the weekend was that we did have a qualified zigzag pattern. So there's the A impulse, and then there's the extension, and then you can see coming down here. Let me redraw that because I didn't click on that bottom bar. So start of the impulse, there we go. That's the C wave right down to 420. So that's what we're talking about. But look where that 161.8% extension lies. Right down there, pretty close to this just above 400 level, which would close that gap that we've been talking about. And you've probably heard me mention at some point in the past with our storm clouds rising, et cetera, that at some point we're likely to go down and close that gap. It would be hard to imagine any sort of a significant correction without filling that gap. But we have to get past that 100% extension right around 420. And you can see there's quite a bit of support there at 420. So that could be it for this time around. We'll have to wait and see. Now, what's throwing a monkey wrench into the works, if you will, is the fact that we gap down today. So you know how I feel about gaps. Gaps get filled. We don't know at what point in time they're going to get filled. Do they get filled immediately? Sometimes it takes a while. Let's take a look at the moving averages. And if we take some of this stuff off so you can see those a little more clearly, you'll be able to see that 10-day moving average did cross the 30. We mentioned that too. That's a negative cross, which usually implies more potential downside to go, but having that big downward day today has gotten us to the point where we're a little bit oversold. So some distance between where we're trading and the 10-day moving average, and whether we fill that gap now or after this correction is completed, we'll just have to wait and see. Right now, the futures are up 17. Something happened about 7:30. There was a big move to the upside. I'm not sure exactly what that was. My guess is that maybe interest rates dropped. We're going to take a look at interest rates. I've been on the record saying that what happened to interest rates from their symmetrical triangle was going to give us a lot of insight as to where the market may go. And I think that's played out pretty well. You've probably been hearing about interest rates at the beginning of the week if you've been listening to any of the financial networks. So note that we did close back above that 50-day moving average. We had gotten above it, but just kind of rested and back to the downside. A little more to go to complete that C wave of the zigzag. But again, we could bounce a bit, maybe even back all the way up to close that gap before completing that C wave to the downside. Looking at the diamonds, our subscribers ask us about this. We do a Thursday webinar that's called the Insiders Meeting. That's for our alert subscribers only. And a couple of them have been asking about, can we show the diamonds? And remember to do that now, because I just in such a habit of looking at the SPY for the markets that I tend not to look at the Dow much anymore. You're going to see that these charts that we're going to look at are all pretty similar, but not exact. So it's interesting there. And clearly you can see this zigzag formation here. So there was the doji at some consolidation, little triangle there, and then potentially move to the downside. But there's all kind of congestion here on the Dow right through here. So right at this 61.8% level where it had found some support before bouncing back to the upside, a little bit of a gap there as well. So this kind of, and if I go back to the S&P, almost looks like a quasi weird island reversal. It's not typically how an island reversal works. Usually there's a gap up and a gap down, which leaves some bars floating in the open. It's usually not a gap down with a rally back and then another gap. So it's not technically by the definition of an island reversal, but you can see there's some bars floating out there on their own. So that's what the diamonds look like, potentially down to 331. And note what is residing right there, another gap that would be awfully close to being filled if we move down to that 100% extension. Looking at the 10-day moving average on the diamonds, not as oversold as we are on the SPY. So that's kind of interesting. You know, most of the markets, primarily the Dow and the S&P, move fairly close together, not exact, but fairly close. And at this point, you can see that not quite as oversold condition or as big of a gap on the Dow. Looking at the Qs, pretty big move to the downside here. We did reinitiate some puts for our subscribers on the Qs, and pretty big down day. And again, look, that the chart is not exactly the same as it is on the SPY or the diamonds. And if we take a look, clearly zigzag here. Hopefully you're starting to be able to see those right at the 61.8% level. So the Qs look like they want to extend right down here to that 352 level. Get that date out of the way there of the potential wave 5 target. And not really a whole lot of support right there. But look where there is support, which is kind of a yikes type moment. There is support down here all the way at the 161.8% C wave extension on the Qs. So more downward move. I mean, that would, again, make a lot of sense, but you've heard me qualify that by saying the markets don't always do what makes sense. But having 161.8% extension coming down to support, all that does make sense, and just not a whole lot of support here at the 100%. A little bit, but not a whole lot. I mean, we found some support there in July, but that would be it. I've mentioned in the SPY updates on YouTube. So again, for those of you streaming on YouTube, mentioned that if we lost the SMH, if we lost the semiconductors, then that wasn't good, because that's been a pretty decent pattern to the upside. Really not a qualified zigzag there. The bounce is too high, so that's going to disqualify that B wave correction. We did come back up and fill the gap. All those gaps from this initial move down on the 20th of September have been filled. But look here, there's a lot more support with where we are right now on the SMH. And we have a 5-wave impulse pattern to the upside here, with the wave 4 getting awfully close to that 38.6% level. But note, if we can't hold here, there's still more support down here at 250. So the SMH still does look better than the other markets, as far as maybe not falling quite as far. We could hold right here. Let's look at the 10-day moving average, and you can see that there is separation there. So a little bit oversold there. Let's look at volume. We'll go back and look at volume on the SPY too, but that's kind of a concern, that kind of volume on the sell side on the SMH, if we're wanting those to hold in there and kind of be some form of leadership for potential move higher. That's not what you're looking for. And then you can see pretty good volume here on these down days. Now the big volume on the 20th, and then again today. So, I mean, it's following Elliott wave exactly with the zigzag pattern and can't be more in tune with it. And again, it's in our SPY update we posted over the weekend. Futures were actually up 20 points on Sunday night when I did the recording for the, or Saturday night when I did the recording for Sunday night when I did the recording for the SPY update. So futures were up, but they erased and moved to the downside. All right, now let's take a look at, we are going to look at some more markets, but this is the culprit right here. This is what we talked about. Remember, we had kind of this odd formation here where we had a symmetrical triangle on the 10-year, and then it morphed itself, which does happen, not often, but does happen, into an ascending triangle. Nonetheless, it was triangle consolidation, and said whichever way we go is likely going to have a lot to do with the market. Well, the market's not liking this move to the upsides, really hitting the tech sector. Everything that we talked about would happen if interest rates went up, it was going to hurt tech stocks. We talked about that. But now look, you can see that interest rates are a bit overbought at this point in time, and a doji here today. So perhaps that's what's happened, given a little bit of a bid to the futures, that maybe the 10-year, the interest rates are dropping back. They should consolidate here a little bit. I was actually surprised to see what happened today, because if you look right here, there was a lot of consolidation right there in June, which coincided with yesterday's move. We traded back below it. It seemed like that's a good place for the 10-year for interest rates to kind of take a pause, but no, we needed one more update before that. We're getting awfully close to disqualifying this 5-wave impulse pattern to the downside. And with this severe break to the upside in rates, even though they're overbought at the moment, it's not looking too good for a move lower in rates. It does look like this is going to be the path that things move for a while. And it wouldn't be surprised to see rates go back up here into the recent highs there back from March and April. I don't think it's going to go straight there. I think this vertical stuff will calm down a little bit. So maybe we get a day or two where we bounce back in the market. Might be a good opportunity to add to short positions or close out long positions. That's our plan if we do get a bit of a reprieve here. So the market's oversold, interest rates are overbought. You can see like those two things should calm down. Now remember, we could have interest rates just go sideways. They don't have to retrace back down. They could just consolidate sideways, and that wouldn't be so good for the market. The market would just consolidate, then likely to maybe bounce a little bit. The next couple of days are going to be pretty interesting to see where it comes out. But I think that was pretty prophetic, talking about whatever happens with interest rates, that's going to tell us the direction the market goes. And that's the way it's worked out. All right, well, with rates going up, and also in that SPY update, we brought gold back up and then talked about gold for a while. And with rates moving to the upside, inflationary concerns, talked about the CPI and the PPI. And the fact that PPI had shown a big jump in inflationary pressures, but the CPI not so much. And that's not good, because if on a wholesale level, producers are having to pay higher prices, but they're not able to pass them on to consumers, then that hurts profits. That hurts the bottom line. And then somebody posted on our video on YouTube that, well, in some way they are, because have you noticed that the quantities that you're buying at the grocery store or whatever are smaller? And like, that's a fair point. And I was just commenting the other day on a bag of chips. They were organic, but a bag of chips that I bought. You know how they puff them full of air and the bag's half full. So same type of thing. And portions do seem to be getting smaller. And so there was, and I don't drink soda, but there was something about Coke bottles are getting smaller again. So I'm not too aware of that, but somebody had made a comment along those lines as well. But back to gold, we're sitting here at a possible area of support. So again, if rates do calm down a little bit, we could get a bit of a bounce in gold. But for the long-term movement in gold, it just doesn't look good. And we have this really nice looking 5-wave impulse pattern with a wave 4 that's right at a 61.8% level. So if we get some sort of a bounce back to the upside, that could be a time to go short gold. It does look like gold's going to at least come down here and test these lows, which do coincide with that 5-wave tap box, which is a time and price projection for a wave 5. Software does that. This program is called Profit Source. If you're interested in it, a lot of people ask about that because the charts are really clean, really good Elliott wave, etc. So moving to the downside there in gold looks like where things want to go, but potentially a little bit of a bounce. Not that oversold though, but there is support. So when you put both those things into context, then maybe we get some sort of a small bounce in gold. I know you want to look at Bitcoin, so let's take a look there. So there was that upward zigzag that we had, and I think you probably can tell where we're going from here. So we were at the 100% extension. We came back and tested the 61.8. So was that giving us a potential move to the upside? It was. That's what happens a lot, but we broke down to the next fib level. So then you take a look at, all right, well, where's the next pattern then? And I'm not going to draw it all on this one bar because I just don't like that. So I'm going to come over here and use this low as where the A impulse ends. And then you can see the B corrections right at 50%. We're down here with potential support right here around 40,000. And there's a lot of support here. We found support there before. Right there, we consolidated resistance actually before it became support in July, and now we're right back down there again. You know, there was the news headlines that came out of China's making Bitcoin illegal, etc. But there was no new news there. They've been jawboning that before, so I don't really think that had anything to do with it. It's more, you know, the risk environment of the market, etc. But honestly, Bitcoin's chart doesn't look that bad. Considering what's gone on with the market. With the market dropping like that, you could have expected to see a much bigger drop out of Bitcoin. So more consolidation here on top of a very important support level seems to be more about what's going on rather than any sort of a crashing move. Now, if we break 40,000, well, then that changes things because then we're looking likely at a move down here to 32. So your key here is 40,000 on Bitcoin. Watch that level. If it holds here, then that could be the completion of this zigzag, and we wait for a new impulse pattern to come to light and see where things go from there. But if it breaks that level and we have an extended C wave, then we're looking at 32, 33,000. And that would be a pretty strong area. You can see how strong that was May, June, and July, all in there, held in that 33,000 level. So it would be surprising to see it break that, but then we'd be talking about a whole new set of things if it did. But these C waves to extend 161.8% is not unusual. But again, we got a good amount of support here at 40,000 that could easily hold. So let's take a look at the CCI. And this is the shorter term of our confirming indicators that we like to look at. And you can see that there is some support down here with that as far as extreme point lows. And down around minus 200, it makes a lot of sense that we could find you know, a little momentum back to the upside on Bitcoin with that showing us that it's at a lower level, creeping back up. It would be more meaningful if the CCI got back to above zero towards positive 100, but at least we bounced off the lows here. And that could, again, give us indication of moving further potentially to the upside. The XJO, for our Australia friends, you can see that we had this downward zigzag there, right at the 61.8% level. And look what happened. We've come down. There's the extended C wave that I was just talking about. A lot of them have been doing this. I mean, I've been watching zigzags almost as long as I've been trading Elliott wave. It wasn't that long after really getting into Elliott wave that started talking or focusing on zigzags because there are only 3 waves instead of 5. So they're shorter term, they're quicker, and they show up a lot in wave 3s, which works. They also show up as a corrective pattern because the zigzag is a corrective pattern after a wave 5, which is very likely what's gone on here. But in the XJO, you can see there's tons of support right here in this level. And it's also the 161.8% extension now. Kind of an ugly day today after bouncing off that level. Perhaps we're just coming down to test it. Could we get some sort of a bounce here? on the ASX as well. It just seems like the market wants to try to mount some sort of a bounce. Not nearly as oversold with the 10-day moving average here on the ASX, though. You can see that, I mean, the bar really is just going through it. So really not that oversold, but that's a lot of support. If we break that, then we could be looking at a 261.8% downside extension on the ASX, because that coincides with the next level of support from April and May. So lots of consolidation, congestion through there, and right exactly where the 261.8% level is. See how these things are kind of working together here? It's pretty interesting that a lot of these Fibonacci extensions happen to coincide with areas of congestion or consolidation in the charts. Is that by chance? I don't think so. Some people do. I don't. I think there's a lot more to it than that. But regardless, you need to know where these fib levels are, because they work. Now, the reason they work, we could argue that for hours, but the fact is they do. And enough people that do program trading program those into their buy and sell formulas, etc. So you need to know where they are. Now take a look at this. We've been talking about this for a while and said this was the best looking chart. And if we lost the Nifty, that also wouldn't be good. But in the SPY update, we said maybe, perhaps, we need to just quieten down a little bit on the India market. Maybe not as significant of a correction. We did have a decent DMI still over the weekend, but that has broken down a bit. As you can see, the ADX is now brought across back below the negative directional indicator. That's bearish. And then the fact that they're coming together. Now they have to cross. Talked about this KISS formation that occurs a lot, where the two directional indicators are coming together and you just could swear they're going to cross, but then they kiss and go back and spread apart the same way they were before. So the sellers haven't taken over yet. That red line has to actually cross over the green line. It's the positive directional indicator. So, we're just consolidating right now. It still looks the best of any of the charts. There's a lot of support right there at 49. Now, if we break that, then everything changes. Then we're coming all the way down here to 46. And this vertical move, which makes me a little bit nervous, because that move up there to 49 was so vertical. If we can't hold it, it'll be down to 46 in a heartbeat like that, because there's nothing to stop it. So if you're trading, and I know a lot of our viewers and subscribers are interested in the India market. If you're trading that, you want that 49 level to hold on the Nifty if you're still bullish. It's still a good looking chart. We still touch the 10-day moving average on the high. I'm just alerting you that everything changes if 49 doesn't hold, but a consolidation right here and then a continued move back to the upside makes sense. Now, a thing I featured in the SPY update on YouTube, which I don't know if you've had a chance to see it, but I just thought I would preface it here because it's another thing to watch. Y'all have heard me say no security in any time frame gets very far away from the 10-day moving average. You've heard that a million times, I know. But another thing is the 10-day moving average and the 50 don't separate a whole lot very often. And when they do, they tend to come back together. In other words, see this separation here where the 10-day is getting a little bit away from the 50? Well, what happened? Well, they came back together. Well, then you rally up again. Again, separation between the 10-day and the 50. Come back together. And we were separated again. So we were starting to see decent separation. And that's where I made the comment, perhaps the Nifty just needs to quieten down a little bit, because in the past, there's been a little bit of a corrective move, but not much. It's just been more of a sideways, slightly down consolidation. That could very well be what happens here. And then we look some point down the road for a continued move higher, possibly as high as 59. But that could be a while. As you see, the forecasted time is out of ways. So anyway, watch 49 is the key there. So those are the markets that I wanted to cover. Sprinkle in gold, a few other things, interest rates, all that stuff is key and important right now, I think. So wanted to show you this before we get into our previous case studies. We did have a real nice trade on natural gas that we sent out to our alert subscribers. And for those of you that haven't seen this before, that are streaming on YouTube, whatever, with us, this is what it looks like for our alert subscribers. Every single alert that goes out has a screen that looks just like this. exactly like this. It gives you the entry, the exit, the symbol, what the trade was, which of our portfolios it was in, how many contracts, the strike, the month, what was the result, winner or loser, a mark-to-market graph, which keeps track of the profit or loss every single day. So we're 100% transparent on every alert every single day. And then we also have this little thing here where we'll send out an alert, but we put a fill price in here when we know that based on brokers, et cetera, that there were actually subscribers filled at this price. And we don't always get the alert price either. Markets move, and especially when the volatility is a bit higher. So on UNG, natural gas, now when we take a look at this, we comment about Elliott wave and our confirming indicators all the time because we are technical traders primarily at Elliott wave options. That's what we do. We're really good at Elliott wave, and we've got a good supporting staff, a set of confirming indicators. Perhaps you've been involved in our indicator mastery series that we've had going on. We're going to be doing the impulse pattern tomorrow night. And by the way, for our subscribers, that manual is available if you wanted to get an advanced peek at it for the impulse pattern indicator mastery class tomorrow night. So it is available on our website. You can go get it and download it now. Our subscribers have really enjoyed. There's a manual that comes along with each one of our sessions that we've been doing on our indicators. Well, here we have a really nice zigzag pattern to the upside. So that's a classic Elliott wave pattern. Look where the B wave corrected at 50%. So the C wave extension's up there right in the middle of the tap box, right where the wave 5 is. Makes an awful lot of sense. Again, the market making sense of where we could go. And we had the fundamental backing. So what I was going to share with you is that although we're primarily technical traders, it's never a bad thing to have a good fundamental foundation. And this is the time of year where often energy does better, right? Because we're moving into the colder season where people are using oil and natural gas, et cetera, heating, all those things. Now, last year, if you look back, you think, well, that didn't really work last year. Well, I think we all agree that 2020 was a bit of an aberration on a number of fronts. But if you go back more often than not, this has been a bullish time of year. So a fundamental basis for this is my point, although our primary goal is reading charts. Well, just 3 days later, boom, big move to the upside in natural gas. And look what happened. Bang, right up to where that previous wave 3 high was. And you can see that we're overbought now. There's the separation between the market and the 10-day moving average. We have a big gap up. When's that going to get filled? There's some potential resistance from that previous 3 high. I mean, that's exactly where it hit. So it made sense to go ahead and close that out. Now, a common question or a valid question should say would be, well, wait a minute. Why'd you get out now? You haven't hit your target yet. You had both the top of the zigzag and the wave 5 giving you the exact same price. Obviously, when you have more than one Elliott wave pattern giving you the same price, there's a high likelihood, a high correlation of that happening. And the reason is we're overbought right now. Now, this doesn't mean we have to abandon this position and just say, hey, that's the end of our UNG natural gas play. But when you can make 55% in 3 days and you're overbought and you're at resistance, it makes sense to go ahead and take that gain. Let the market calm back down a bit. Maybe we get a little bit of a pullback, slight one today. So maybe we pull back a bit in natural gas and we get another entry. So it doesn't mean that this is off the radar screen, because I can tell you it's not. It's right at the top. But when you make that much money in that short of a time frame, it's prudent to go ahead and take that. You're getting a little greedy if you wait. It's a lot easier to say, okay, well, it went higher from here and I missed out on some profit, rather than watching it go back down, fill the gap, and watch this go away. So we're still watching it. We'll still look for another entry back to the upside on natural gas. But this is the kind of thing that our alert subscribers, if you're watching on YouTube or elsewhere and you haven't become an alert subscriber yet, great time to do so. The market is getting pretty interesting. Just go back and watch our SPY update from the weekend and see if you don't think we were really spot on with what's happened. It would be a good time to become a subscriber, an alert subscriber, if you've thought about it in the past and haven't done so yet. All right, so taking a look at some of our past case study considerations, going all the way back here. This is a really old one, so we're going to get rid of this one tonight. We'll give it one day tomorrow. We had given it last week. I said that too. We'll just give it time to see if it bounces, because after this triangle pattern, we had a break to the downside, so you can see the breakout, but they put so much volatility in these options that when it came out, even though it had a pretty nice breakout move, it didn't really generate much of a gain. So we rallied back and we've traded this a little bit with adjustments, and we're just sitting here at all this area of support, and goes back all the way to November of last year. And then look what happened. It took off. Well, could it do that again? Well, yeah, if the market calms down, it could run again. So, you know, I talk about this thing called max pain. It's a psychological thing that right when you get to the point where you're just done, you know, I've had enough, can't take it anymore. If you've had losing trades, etc., or you're in a losing trade and you're thinking, I'm just going to close it out and take the loss. Once you get to that point, that's usually the best time to double up. And it's just how it works. When you're so fed up, you're at the end of your rope, that's about when things are ready to turn and go back the other way. And so that's why we want to give it just a little bit more time to see if it'll bounce. But it is pretty frustrating that it's just hung right in this area here for a couple months now. It hasn't really moved, but it still has potential to. Align Technologies, we looked at that one on the 24th of August, and you can see two bad days here. Why? Well, what did we talk about with interest rates? That if interest rates moved to the upside, it was going to be tough on tech stocks. And that's proven to be exactly what happened. We've got to watch this break of the 50-day moving average. This actually could turn into a good short position if interest rates continue to move to the upside, but we're likely to get a bounce back here as it's a bit oversold. You can see right here, we're a little oversold from the 10-day moving average. And if interest rates calm down, even if they don't significantly pull back, just a calming in interest rates, I think will give the technology sector an oversold bounce, and then we'll reevaluate and see what happens from there. Well, watch this chart. Here we have a Camping World, and so this was a triangle pattern. You can see the setup here, and when I say watch this, this has been confounding me for a while now as the market has weakened. Looked like we were going to head lower, and then we moved back to the upside. Look at today. I mean, it actually tried to make a run at the previous highs here today. Now, it gave it back moving into the close, but that's not a very ugly day considering what an ugly tape we had on the market today. So wouldn't common sense tell you that, well, these are luxury items, and that's usually the first thing that goes when the market starts to weaken, or you start to see signs of economic problems, a la higher rates and higher inflation. Neither one of those are good economically, but yet we move back up, and interest rates moving up seems like it'd be a negative too, financing out those big motorhomes, et cetera. But that's why you trade the charts and you don't trade what makes sense to you, because quite often the markets don't make sense. Now we'll see if it continues and breaks above that 43 level, but I was really impressed with how strong this stayed in today's movement. So we'll see if it can continue to break to the upside. Pretty rough day for bots. As you can see, there was the wave 3 moving back down. So there's that retracement of the vertical move. That's what can happen. And so you get interest rates moving to the upside. I had a doji yesterday, so looked like maybe we're going to spring back to the upside with a perfect doji, but nope, it was a move lower that occurred. It's just indecision. Dojis don't tell you which way things are going to go. Often it's a change of direction, but it's indecision, and it can go either way, kind of like triangles. And so it moved lower. So here we are at 37, but you know, this has a potential point of support as well, because of the fact that if interest rates pull back, this could likely jump back along those lines as well. But look at this one. This is a bullish position that we had. This came out of our momentum search that we have. And look at that. We're higher, even with what's going on in the market. So we moved to the upside here. So we were at 1498 when we got in, and 1538, even with a little bit of a downward day today, but it's just shrugging off what's going on with the regular market and continuing to move higher in its wave 3. It's pretty impressive as well. And then we also talked about last week national beverage here, and talked about it as a defensive sector, right? That if the economy does weaken, the market does weaken, money still has to go somewhere. All that money that comes in every month to IRAs and 401ks has to be put to work somewhere in the markets. So they start to look for more defensive minded sectors. And so beverages make sense, whether it's soft drinks, alcohol, whatever. People are still going to consume their beverages regardless of what's going on in the economy, interest rates, inflation, et cetera. Now we are nearing a point here of resistance, but look, an up day today. So that's my point. The market was big to the down day, but this was defensive. So if we were going to put on a bullish trade, this one was a smart one to do. And so we moved back to the upside there. Look at $1.81. They're up 3.5% on a day when the market was down. So giving you a good indication there. Well, wait a minute. That was the entry. Excuse me. So moving back, there we are. There. And still pretty much hanging in there. Didn't have an update today as much as 3%, just 0.13. So I apologize for that, but you can see clearly hanging in there really well, being a defensive sector. So same scenario though, if it breaks above 55, we could be off and running, and this would be a good place to hide, obviously, by how it's acted if the market does continue to weaken. Now, I don't think we're going to see too many days like what happened today. We could, I would prefer not. I'd rather see a process to the downside rather than it getting it all out in one or two fell swoops. It's a lot more fun to trade to the downside when it gives you more opportunities to get in and out rather than everything happening like it did in March, early April of last year. So I prefer to see a kind of a zigzagging its way down, if you will, down towards 420 and potentially 400. Yeah, the futures are giving back whatever that I get something happened. I don't know, there may be some news or something at 7:30, but the futures have retraced it up 9 points now. So it's cut that move exactly in half. But I still think there's a chance for a bounce tomorrow if rates calm down. If rates shoot up again tomorrow, probably going to be another ugly day in the markets. All right, so now let's go ahead and see if we can find a case study consideration for this week. As I mentioned, the software is called Profit Source. And over here on the left-hand side, these are what are known as pre-computed searches. You can create your own search. If you have your own set of indicators that you like and you want to put them together and run test searches, that's how I created the system that I use. It allows you to do that. And you can go back a year, you can go back 2 years, whatever, back a month, and back test your system and see how it does over many types of time frames and applications. Or over here, these are already done for you, so you don't have to wait for the search to run. And you can see right here, these ones that say EWO under this Elliott Wave Options tab. I use this program, so a lot of our subscribers were starting to get it. So the folks that create Profit Source, the Hub organization, created these for us. So if you're an alert subscriber and you have Profit Source, you get all these. If you have Profit Source but aren't an alert subscriber, then these aren't available. So that's why it's the Elliott Wave Options tab. But these searches that say EWO, those are mine. Those are the ones that I've created. And so when we take a look at this, not surprisingly, there's no results for our impulse move on the bullish side. On the corrective side, there's some to look at. So we'll take a look at those. We recently just did one. Let me show you this real quick that came out on that search. And we close this one out today, actually, on the move to the downside. You can see that was a bearish trade. And you can see this downward zigzag here. And look, right to the 100% extension to the downside. It gapped lower. The put was in the money. Time to take that trade off. And so we did. I didn't feature that one, but just wanted to show you that we can find impulse patterns to the downside just as we can to the upside, because the market doesn't always go up. So if you don't have a good system for trading it lower, I know the market's only been going up for 3.5, 4 years. You haven't really experienced it, but it's going to happen again. And we may be heading into that if we move into a point of higher rates, the Federal Reserve starts withdrawing liquidity, et cetera. That's going to be tough sledding for the market moving to the upside from there. So there are a number in the corrective side. So we'll take a look at those and see if there's something that we can find. We're down to 77 consolidating stocks. Well, that also makes sense because the market's had a big move to the downside. When looking at this not long ago, what was there, 169 or something a couple of weeks ago when we were looking at it? So let's see what the corrective side looks like and see if maybe we can find something on the bearish side that we could put a look. CLOU is still there. Check that out. It's still on the list. But we closed that one out today, meaning that, well, maybe it's got more to go to the downside. So we could be looking for 161.8% extension to the downside there. I don't know. It's oversold right now. You can see separation with the 10-day moving average, the gap, all the things that we've talked about. We're nearing support right in this area here. I don't know. I think we'll find something better. That one looks a bit oversold. Keep an eye on it and see if it happens to break that 100% extension, but it seems like it wants to bounce. It did break the 50-day today. The 1030 has not given that bearish cross yet. It looks like it's headed that way, but yeah, we've already had success with that one. So let's see if we can find something else. This FMD, remember when we had that one to the upside? Let's take a look at that because it's so much fun. When this is one of the beauties of Elliott Wave, when you trade a stock to the upside and then that pattern completes, then you turn around and trade the same stock right back to the downside. We used to talk about that in live seminars all the time, way back when we actually did live seminars on how you could do that. Because if an Elliott Wave 5-wave pattern finishes, what happens after that? It goes into some sort of a correction pattern, whether it be a triangle, a zigzag to the downside, sometimes a sideways flat, whatever, but it does something from the corrective side. And you can see this move to the downside today. Now, this looks awfully interesting because you can see that we did get, now here's what I was talking about. We didn't get that kissing of the two lines here. That's a firm cross and it's pretty vertical with these two directional indicators. Again, this is the kind of stuff we talk about in our indicator mastery series. The more vertical those two lines cross, the stronger the signal is. So the fact that we had a vertical cross with the sellers jumped in today is what that means. Now, we'll have to wait and see what happens with the market in tomorrow's trade. But if you look at this displaced moving average is 6.4 is where you look at a particular moving average and then you displace it. And this one is moving a 6-day moving average forward 4 spaces, which basically is about as close as you can get as a crystal ball looking into the future. So what it means is that if everything continues as it has been with this 6-day moving average, here's where it's likely to be 4 days from now. That's what that means. And so you can use that as a guide. And of course, 6 days, very short term. So it broke below that today. And that's one of the signals on this search is looking for that. And boy, we could easily, here's another one of those things that makes sense. We could easily come down here to that previous 4. That's what's supposed to happen. So let's look at the 10-day moving average. We're not too oversold here, a little bit. We do have to watch this 125 area. So my thought here on this one, because this looks awfully interesting to trade to the downside, I think it'd be a great exercise for TradeFinder as well, since we had this one as a bullish one that worked. You know, we traded this move to the upside. Is if we look at this, watch this 125 area. If the market does bounce a little bit and this bounces it back above 125, well, then you want to be careful and wait for another break below 125 for an entry. If it follows through tomorrow, so these are the particulars for this. I'm going to write this down regardless of what else we look at, but I'm going to write this one down. If it follows through, which means another low tomorrow, so we have to break the low of today's bar and have a lower close. That's what we mean by follow through confirmation day. Then I think this one's good to go down to 110. I think that's a good bearish trade. But if it bounces back above 125, then we hold off and see how far that bounce goes, because it could bounce back up and test those highs right around 130 or above. if the market does give us a little bit of bullishness for a day or two. So that's the particulars there. So I'm going to write that down for today, 9/28. We're going to put FND, and then I'm going to put an asterisk beside it. This is insights, exactly what I do on a daily basis, is if follow through below 125. That's what we're looking at. So as long as we don't break back above 125 tomorrow, and it looks like it's going to be a follow through day, then you enter that. I know there could be a bounce there at the 50-day moving average. I think that would be likely short-lived. The support looks more down in that 115, 120 area. And it could be a really good bearish trade. Let's see what the volume looked like today. Not too significant. So this one could bounce back to the upside, or maybe they're hanging in there and it would take a follow through break of the 50-day to bring the volume in, and we might already be in. But so those are the keys. So remember that. Back above 125, pause, follow through day, enter to the downside with a 110 target. That would be the plan there. We'll see there's a couple more that we can look at, and then I'll ask questions. I want to look at Broadcom. This one also, yeah, it's been pretty darn strong, hasn't it? You can see that just barely crossing there. You know, almost have to put a microscope on that to see if that actually did cross. It looks like it did. They're pretty much touching. Little bit of a downward move. I don't see too much to the downside here. This one, I'm not as excited about this one because look at all that support there at 480. So even in weakness today, it wasn't down that bad. 13 points. You say, well, that's not that bad. Well, not on a $500 stock, but a move down here to 480. And then even if it gets to 480, look at that. I mean, there's just so much support here on this stock. This would be more of a candidate for potentially a butterfly than anything else with this the strength that it's showing there. So I wouldn't feel too good about trading this to the downside. I just don't think it would work out. And you know, when they pump in volatility on puts and then you don't get it back out, that's no fun either, which is why we did the in the money puts on the CLOU, because the VIX has been elevated. So you don't want to put on a position where it's all extrinsic value and then it slows down to the downside and they pull the volatility out of the market. Even if you're right on direction, you could lose money on the loss of volatility. So you counteract that by not even allowing it to get into the equation. But anyway, too much support there on Broadcom. So let's see what else we can find. I'm not familiar with this one is. Oh boy, look at that. We kind of missed that one, didn't we? Right to the way. Here's what I was talking about. Now it may go lower because the target should be down here. Maybe we haven't missed it. I shouldn't have said that. But we missed a pretty good move. And now we might find some support there because there is a bit of support there. And then there's a ton of support here. So this boom, boom, boom stuff is probably not going to continue. It'll be a little tougher sledding on the way, the rest of the way to the downside is my point. It's probably not going to jump, but we have a little more to go to fill that gap. So filling that gap really does put us in this area of a whole lot of resistance to the downside. I think it eventually works its way down to the wave 4, but it could be a bumpy road on the way down. So I'm not too sure about that one either. Info. Woo, now there you go. There's an ugly day. That's the crossover you want. Look at that. We're going to add this one on there too. Such a good run. Nice 45-degree angle. Look at this Elliott wave stuff here. Right at a 38% wave 4. So that means the 100% is an extended wave 5. So it already moved to an extended level. Big downward day to day. Very vertical cross in the 2 directional indicators. Above average volume, but not exceedingly so. Really good looking chart. So we're going to add this one in there too, to the downside. INFO. Again, maybe we get a bounce with the market. If we look at it, it might be just a touch a little bit oversold. It did break the 50-day moving average. Found a little bit. This is the only real support area that it has left before it gets down to the previous three, and then on. So there's more room here. The support levels on the way down, or resistance, whichever way you want to view it, are not as stacked as they are in the other charts. So I like this one too. Maybe we bounce a little bit tomorrow because it's a tiny bit oversold. You can see there's the 10-day moving average. I know we touched it on the high of the day, but still, we moved down, 5% on the day today. That's a big move to the downside. So maybe it bounces a little bit, potentially back up to the 50-day moving average. Likely you get a better entry in the morning. An ideal scenario, so here we go with the ideal stuff that doesn't always work out, would be a bounce back to 120, because you can see there'd be resistance there. See how easily it went through that? That's why I don't think that's going to help too much on the way back down. It went right through that 120 area like it was nothing. I mean, it didn't even look at it as far as support, and went right through the 50-day moving average as well. And then that good volume. So I like that one as well. All right, so we'll go ahead and open it up to some questions. And Randall's asking about the Qs on the zigzag. Well, we're at the 61.8% level, but yeah, 352 is 100% extension. It doesn't necessarily mean it's going to be a straight line, because again, very much oversold right now. Sliced right through that 50-day moving average. It tried to hold it, but nothing today. So it's at an area of support. It's at a fib level. It could move down there, and you might be looking at, well, that's in a 5-wave impulse pattern to the upside. Now, how can you have a 5-wave pattern? This is actually a good one to look at. I didn't feature this as much before, but how can you have a 5-wave pattern to the upside and a zigzag pattern to the downside? Well, it shows you that you can. What are we in? We're in wave 4. That's a corrective wave. So wave 4 having a zigzag pattern in it makes a lot of sense. A lot of people don't talk about that, and they say it can't do that. Well, yeah, it can. It just did. There's one right there. It's a perfect example. Maybe we bounce back to the upside here, and it looks like we potentially may get a little bit of a bounce because we're oversold, but a very good chance that it gets down to 352. Absolutely. Timothy wants to know what's happening with Amazon. Well, it's getting crushed with the rest of the market. And honestly, 2.5% is not that ugly of a day for Amazon. The key for Amazon is always going to be right through here. As long as it holds that 3,200 level, that's been support for a good part of the year. Broke below it in February, March, but got back above it. So it's not nearly as ugly as a lot of the charts are, and probably won't break this 3,200 level unless the market really tanks. We could have a decent correction and this still hold above 3,200 very easily. But if the market falls apart, then that's when the institutional managers start dumping their higher dollar stocks, because it's a lot easier to raise cash. You have to sell fewer shares to bring in a lot of cash on a $3,000 stock than a $30 stock. Wanted to gather thoughts on which camp I'm in for Q4. Gloom and doom of inflation, inability to pass budget rate. Congress. Why does Congress do this? The theatrical aspect of what they're doing is just so frustrating. They know they have to raise the debt ceiling. They do. Why do they drag all this stuff out? And then maybe they go a day or two past the deadline. But are they really going to default? Is the U.S. government going to default on its bills? It's not going to. They have all these meetings and all this stuff, so all the senators get their TV time, and just drives me insane, the political theater. I can't stand it. But yeah, it's factored in. But this is really about interest rates and some refactoring of what's going on if rates do stay to the upside. And we'll see, if not going to be the Federal Reserve to come in and buy anymore. So I imagine the Federal Reserve is like, what do we do? Because they got all this liquidity that they want to take out, but yet rates are already going up ahead of it, unless they're already taking some out. If I've surmised, with the Federal Reserve telling us one thing but doing another. But if they're not, and other countries don't come in and absorb this, they are really in trouble. And you've heard that word. It's the one word that nobody wants to hear. We know trading options, it would be gold. But for people with longer term retirement plans, stagflation is a nightmare. And the market goes really nowhere. It goes up and down, up and down, up and down, but it goes nowhere long term. And so it's great for a trader, but it's not for a long-term investor. And so long-term investors hate stagflation, and it's not a good economic situation either. But that's the scare of what's going on right now in the markets. So Twitter is fine unless it breaks 60. So as long as it holds in there, it had a down day today, but it's been doing great. A little bit of a down day yesterday, but as long as it holds above 60, it's fine. There's the wave 4. If it breaks 60, though, then that's a different story. If it breaks 60, then it likely comes down and retraces this entire impulse down to 50. And I don't think anybody wants to hang around for that. But for now, if as long as 60 holds, it's okay. It barely broke the 10-day moving average today. So all in all, considering how ugly today was, Twitter did fine. Jets, they're not going to like the rising fuel costs. And so that may have reversed that one to the downside. They were doing well with the fact that we are at least seeing the virus numbers come down. That was getting better. People start traveling, lodging, as you saw that CPLG trade and others are doing well. And so this just kind of got stopped in its tracks. But look, it was also a bit overbought. So it was a expected time for it to take a little bit of a pause. It had gone vertical and then pulled back down. It just was overbought yesterday. Also bumped its head into resistance there at 25. You can see that. Bring it down, that big area of resistance there. All those lows that it hit March, April, May, and even June, it broke below it. So it went back up to test it. So it's overbought still. And now the key will be, can it hold 23? How bad does the fuel cost get? That kind of stuff. I've heard forecasts of oil going back to $100. If oil goes back to $100 a barrel, I don't know how many airlines have hedged their fuel costs. We'll find out. That's the kind of scenario when you find those types of things out. But right now, today's downward move was just recovering an overbought condition, not necessarily an ugly day for those. Mike asked about it. I knew somebody would ask about the IWM if I didn't cover it. I just feel like I say the same exact thing on the IWM every time we look at it. Nothing else matters with this until we break 210 or 230. It's in this massive trading range. It just keeps going back and forth, and we were moving up towards 230, so we had to come back down, right? So there's nothing to say about the Russell until we break above 230 or below 210. And you look at it, it looks like a fantastic butterfly, but how do you put on a butterfly now on a stock that's been trading sideways for the entire year, the whole year? The odds are it is going to break one of those two levels, the support or resistance. So until that happens, I don't know. FCEL. So what do you think is going to happen with the electric, the EV stuff, if oil goes to $100? Think Tesla and stocks like that are going to do well? I would think so. I don't think that would be bullish for those. Again, barring a major catastrophe out of the market. I mean, Tesla fell today, but not that much comparatively. And so This one hit resistance at 8. And, that kind of makes sense. That was support back in April and May, broke above it, couldn't hold it in July. So it found support at 6. It took another run at 8. What a bad day to try to do that. But, this could be the kind of thing that can catch itself. It was overbought a little bit. So just not enough energy to try to break a major resistance level yet. But it should start to work its way back towards that previous 4. If it can break above 8, it's got to get above 8 first. That would be the key. KRE. So look at the banks. You would think that would be an area, right, that should do pretty well with rates moving back to the upside. Same thing here. This looks very similar to Jets, where just got overbought. And yeah, they're loving the interest rates going up. Now they can make some money. Remember, banks make money on the spread. And so when you have interest rates go up, it widens that spread. So they lend on the short end, and they buy on the short end, they lend on the long end. And so they keep the spread in between. So as rates go up, it allows them to make more money. So this is a good place to be. Overbought, significantly overbought going into today. So again, this has more to do with that. So you wonder, okay, do rates pull back a little bit? Maybe this comes back down towards the 10-day moving average, but this should be a decent area as long as rates do stay a bit elevated. The issue here with it just has a lot of resistance in the way. So also bumped its head, so it was overbought and hit its head against that resistance. And once it gets above that, it's got more right here. Now break above there, and now you're off to the races. And that could easily happen, but not nearly enough energy to try to break above 69 today. It's just way too overbought. And you can see it still separated with the 10-day moving average. But yeah, Baron, that's a good thought. Could be a good place to hide there with interest rates moving back to the upside as well. Harold, you're right about the end of quarter. So that could be a little bit of a bounce thing there as well. And what that means is that we're nearing September 30th. And so that's the end of a quarter. And that's when all the investment, they report all their earnings quarterly. And I don't know that they'll want to let the market tank too much going into quarter end. That could have helped play into today. We start to have an ugly day and they're like, that's it, I'm taking profits. It's not the 30th, but we're close enough. And that could have aided in, an exaggerated move to the downside because they want their bonuses, right? So if they've got profits moving into quarter end, they want their bonuses. And so they'll sell and take those. So that's going to be, I think the market is either going to bounce or get even uglier. I don't think it goes quietly into the night. In the next couple of days, meaning that it already started, I think, with some profit taking by the investment managers today. And then if we don't get a bounce back, then more may join in. And so we could have an upward move if it's not very strong, reverse back down after a bounce. But all that's speculation. I'm just jawboning now with what could happen. But Harold brings up a good point that we have the end of quarter coming up. They used to talk about end of quarter window dressing, which is when they would prop the market up so that they could, sell at the end and show profits and get their bonuses. And I mean, that's just how investment managers work. It's all about the bonuses for them. I was in that world for a while. It's what I hated about it. Events calendars. Oh man, we're going to be coming out with our time spread stuff. And could the timing have been any better? I mean, unbelievable how well that's working out. So just stay tuned. That's going to be released for our alert subscribers very, very soon. And, the data that we've been working on this for so long, and the data has exceeded all of our expectations on the system. So it's going to be really, really cool. China is just always going to be, who knows what they're going to come up with next, right? I mean, the stuff that they say and they attack their companies. You heard me job on that before. Who knows what they're going to say? I think the market's getting tired of the constant hits there. James, what trading platform is being used? This program, Profit Source, is that what you're asking? I can't talk about brokers. if that's what you mean. But this program here is called Profit Source. Ray wants to look at Microsoft. Let's look at how Mr. Softy do. Oh, dang. Good call, Ray. Wow. Yeah, that's ugly. So Ray obviously knows his Elliott Fibonacci stuff. So he's asking, does this go back to the 61.8% level? Well, why would he ask that? Why wouldn't he say, does it go back to the previous 4? Well, because he saw that the wave 5 extended past 100%. And when the wave 5 is greater than 100% extension, you look for a move down to the 61.8% level, not back to the previous 4. That's no longer the target. And look at this. Another thing here that makes sense. 61.8% level also coincides with the wave 3 top. So a very logical point for it to find some support. Now, it's also oversold right now. You can see that where it closed based on the 10-day moving average, so much stuff is oversold. So I wouldn't be surprised to see an upward bounce for a day or two. But again, that could just create some really, really good potential downside entries if that's what happens, especially if we get past the end of the quarter. So here's the ideal scenario. The market bounces back through the 30th, and you've got some very good potential downside entries at that point in time, I think, unless something significantly changes. And what would have to significantly change is rates would have to give up all of that move. And could they? Well, it was vertical, right? So you know what I say about vertical moves. And so they're going to have to come all the way back down. If they do, then we have a different game. So if rates don't hold and they reverse and come all the way back down here, then the whole scenario changes. That's my opinion, and it's been my opinion. You've heard me say it in numerous, what were there, 2 or 3 different SPY updates on YouTube. For those of you live streaming, just take a look at it. And that what happens here is going to tell us a lot about the market. Had it broken to the downside, I think the market would have rallied. Broke to the upside, probably going to sell off because it's going to hit tech stocks. That's exactly what's happened out of this. So, well, thanks for the comments, Ray, but you're really spot on Microsoft. I'm going to keep an eye on that one. That looks like that could be a great trade to the downside. So you watch me write stuff down, and I know I'm really old school because I really do. My watch list is handwritten. I don't have, a fancy Excel program. That I know there's a lot of more computer savvy people that everything is, everything's all computerized. Well, I still just write stuff down in yellow tablets, and that's the way I look at things. But Microsoft looks really good after potentially fixing that oversold condition that it's in right now. All right, so we made it, went over the hour. Sorry about that. Again, for everybody watching, really appreciate your time. I say this every time, I'll continue to. Time is the most valuable thing that we all have, and we appreciate you spending some of your valuable time with us, and we hope that you find this time well spent and educational, and look forward to talking to you again next week. We'll have a lot to talk about with the end of quarter and see what happens with the